Hi, John from York Bay Financial Partners, looking at investment markets. Certainly the US share market and, obviously sort of global markets on the back of that, still trading on the bull tack. Now that's really on the back of the Fed meeting last week that came out and still reaffirmed they're looking for 2 to 3 cuts this year. Does acknowledge is that US interest rates are too high, and despite the sort of persistent sort of inflation that maybe isn't coming down quite as quickly as first anticipated, and obviously still a robust economy, they're still looking at cutting 2 to 3 times. But as always, they come out with a proviso that is data dependent. Now, what was interesting is that the Bank of Japan has increased interest rates for the first time in 17 years. And that takes away their negative interest rate policy. So US interest rates still sort of trading in the sort of current range, 10 years around 424 and the 2 years around 461. With a shortened week this week because of the Easter trading, but also as well sort of quarter end as well. It'd just be very interesting to see how the market sort of trade over the next sort of couple of days. Now on the political front, Donald Trump obviously was failing to get that big bond of over 450 million for his fraud case, but that's now been reduced by the courts to 175 million. And he has an extra 10 days to come up with that bond. So it will just be interesting to see how that plays out, because having seen it being reduced, if he is still struggling to come up with that bond, it's very unlikely it will be reduced again. Oil is back above $80, currently trading at 81.70. Now in the UK, the Bank of England clearly on hold, but also as well quite interesting to see that latest inflation data. That came in at 4.3, much weaker than anticipated. And that does sort of beg the question now of when people start to look for the Bank of England to cut interest rates, because certainly the UK economy is struggling. It's growing at a very sort of mediocre rate and certainly needs a little bit of a boost at present. Now, similar story in the EU as well. You've got falling inflation. Obviously, the issue there is that you've got several different countries at sort of different levels on the inflation. But overall, European inflation is falling, and it's just a question now when people start to look to see when the ECB is going to cut interest rates. Because certainly historically they have been a little bit lagging on sort of decision making for both putting up interest rates but also cutting as well. And obviously all the time you've still got the Russian-Ukraine conflict going on. And sort of quite interesting this week where you had that terror attack in the Moscow concert, which was claimed by ISIS, but yet President Putin's still trying to get a slant on there that Ukraine was behind it. And potentially just shows how desperate he is to try and sustain the sort of support and for the conflict that say is now dragging into its third year. Reserve Bank of Australia left rates on hold again, pretty much as expected. And again, it's just a question with the data coming through and inflation falling of when we're looking to start to see an interest rate cut in Australia. But you have to remember that they didn't increase rates anywhere near as much as most other central banks as well. Now here in New Zealand, pretty much as expected, the latest GDP data for fourth quarter showed a contraction year on year of 0.3%. So sort of quite interesting that, despite what the previous government tried to sort of claim that we're out of recession, New Zealand has now been in recession for over a year. So it will be pretty interesting to see what comes out on the budget coming out in May, because certainly the state of the books, we're in a pretty dire state. But obviously one of the big election promises from the new government was tax cuts, and that's just going to be very interesting to see how they sort of play through over the next sort of 2 to 3 months. Interesting as well to see some of the high street banks have sort of been just trimming their mortgage rates, which again is potentially a sort of clearer sign that despite just trying to get some market share out there, also as well they've probably got a pretty clear indication that they don't see rates going much higher from the current levels. And as discussed here before, it'll be very interesting to see what the Reserve Bank come out with once the Fed start to cut interest rates. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.